Hello and welcome to this edition of the Monday, July 13th report from Bourdieu. In terms of economic statistics, it was the US ISM Services Index that stood out last week. It's quite good at 54, as you can see on the left, which is clearly in the expansion zone. And above all, it contains two interesting pieces of information on the right. On the one hand, the prices paid component is declining, and on the other, the employment component is trending positively. All of this would be an ideal scenario if the memorandum of understanding between the United States and Iran had held. But as we learned on Friday, that is not the case. With everything coming to a head at the very end of the week, the pre-agreement dynamics have therefore come back into play. This return to square one has resulted in an increase in the price of oil by nearly 6% last week, to which we must add another 3 or 4% this morning, and a rise in sovereign yields of about 10 basis points, meaning a drop in bonds of between 0.5 and 1%, and a decline in stocks and gold of between 1.3 and 1.8%. The only market on the rise is the American stock market, once again thanks to the tech sector and related industries, which serve as a safe haven in the face of uncertainty. This dynamic does not prevent American mid-cap stocks from continuing to outperform large-cap stocks, as has basically been the case for about a year. You can see here in red that the Russell 2000 index is rebounding against the S&P 500 just as it did at the end of the internet bubble in 1999 and 2000. The correlation over the past 20 years between this index and the ISM New Orders Index for manufacturing, shown here in gray, had been broken for about 3 years. Why? Well, because industrial orders themselves were largely tied to massive investments in data centers, which do not benefit the entire ecosystem of medium-sized American companies evenly. We believe that this dynamic should continue, given that only a third of the $1,850 billion in federal budgets related to the Infrastructure and Jobs Act about 4 years ago have been committed so far. This week, we will have many more statistics, especially in the United States, with consumer and producer inflation data. And we know from the minutes of the last meeting of the US Federal Reserve that this is the topic that will dominate its monetary policy in the coming quarters. But what will drive the market in the short term remains the normalization or not of the situation around the Strait of Hormuz, unless the second quarter earnings releases and the accompanying statements turn out to be even better than the approximately 23% increase in profits expected for S&P 500 companies. That's all for today. Thank you for your attention. We wish you an excellent week and we'll see you again next week.